Good morning, FX Street. Good morning, FX Street. Good morning, FX Street. Good morning, FX Street. Oh no. Oh, I found it. I found it. I was looping. I think this is B-Rad playing the violin. I don't know who's harping. Let me get the chat. I gotta pop the chat in for us. There we go. How's this? That'll do, pig. That'll do. All right. Well, I guess we got to get going. Welcome to FX Street. Trade non-farm payrolls live. Month 214. 214 months. That is just a couple of months short of 18 years of doing this one webinar. Holy smokes! As they say in Lagos, that's amazing! So, good morning. How are you? Comment allez-vous? Ni hao ma? So, what do you want to do today? Why don't you tell me in the chat? My name is Wayne McDonell. I am a humble currency trader just like you. My first real job was working at NASA. Yeah. Because I was on the path to becoming an astronaut. Top Gun qualified in the United States military to fly. Yeah, great. I accepted their offer. They gave me the best offer of every military branch in the United States. And on day one, they found out I was diabetic and kicked me out of the Navy. And that was the end of my astronaut career. Too bad, so sad. So I was on BART, if you guys know BART, going from Oakland back to San Francisco. I said, well, I guess I'll be a businessman. Yeah. So anyways, a little bit after that, I was running a nonprofit organization of 3,000 people, and I sat on the board of directors with George Soros. He was on the board with me. Very cool. So things can change rapidly in this world. After doing that, hey, I found myself in the Silicon Valley in the early to mid-90s. So I'm like, well, I guess I'll go out there and be a high-tech entrepreneur. And I almost made it. I worked at Apple for a while. I worked at Cisco Systems for a while. Yeah, I owned Apple stock at $6. True story. Held it for decades. Oh my God. Yeah. Cool. Right on. Then I went out on my own and almost made it. Almost. I was doing things that just hadn't been done before. I was either too early or too late or too naive or too young or too pretty. I don't know. Got close. But then went on to become a venture capitalist. That was great. Many of my investments are still in the market. I also ran a startup that's still the leader in their industry 20-something years later. I talked to one of the current clients. I said, you know what? I'm basically a founder of this company. How do you think of it now? How do you like it? And he's like, I love it. So good. So there's a lot to be proud for. But in my VC days, I'm sitting in my beautiful office. Yeah, it was beautiful. 3 beautiful windows with a view of Treasure Island, the Bay Bridge, San Francisco Bay. I was loving life, living large, living my dream job. Imagine being a high-tech entrepreneur in the Silicon Valley, and in this case, investing into entrepreneurial ideas. Basically, if you've ever watched Shark Tank, that was my job. I'd listen to 2 to maybe 3 pitches a day, and I'd fly entrepreneurs out, and I'd look at their prototypes, and I'd hire consultants, and I had a marketing research person on my personal staff. I had 2 assistants. Really cool stuff. I mean, I was happy, right? I felt good. I felt big. I was doing things I loved. And then, in all the strangest things, I was reading Architectural Digest magazine. Yeah, the AD. And in that magazine, it was talking about someone that had an apartment in New York City. He had an apartment on the 16th floor. And then a couple of years later, he's flipped it and got to like the 30th floor. And then he flipped that a couple of years later. And now this new apartment was on like the 50th or 80th floor or something. Definitely, like quite literally, the guy was moving up in his career. And then it said he was like 28. This new apartment he paid like $20 million for, and it was totally gutted. It was just concrete and I-beams. And he was going to drop another, $8 million into decorating it. And I was probably about the same age, and I was not quite ready for a $30 million apartment. And I'm like, what the hell does this guy do? And at the bottom of the article, he said he was a Forex trader in a $2 trillion a day market. And I'm like, bullshit. Pardon my French. There's $2 trillion a day. There's no way, Matt. There's just no way. Because here I am. I'm a venture capitalist trying to get $100 million a year, not as market cap, market potential. Like if the entire market was $100 million a year for a new high-tech startup or product. And here the article says $2 trillion per day. And I'm like, there's just no way. So you know what? I did a little research. And you know what I found out? It was true. Forex has $2 trillion a day turnover. So I'm smart enough to go where the money is, and I quit my job. Yeah. I was right. You guys don't like it? All right. Well, I was just like, this is where I come from. And so for the last 22 years, I've been a Forex trader. And and teaching for the last 20 as I go along. Yeah. So anyways, very cool. This is that's my background. This is how I got here. Just so, but apparently everybody knows this. So anyways, sorry to ring your ears. So anyways, I've learned a lot of things over the last 20 years, or 20 something years of doing this. Okay. And I'm here to share the things I've figured out, and I don't mind sharing my mistakes. You see? Yeah. Well, the other thing, to the couple of people they're like, hey man, we've heard all this. Well, maybe the other flip side of why I'll tell a story like that, you don't require any sort of license to be a Forex guru on YouTube. So I guess I'm building sort of my credibility where the average guru wasn't on path to being an astronaut, didn't go through the selection process of the military, who filters everybody out for this. And the military said, boom. Okay. You're Top Gun qualified. You are the guy that we want. So they vetted me. Then I went through this other process, so I found myself I was actually 20 years old, running a company of 3,000 people. And well, first of all, that's a vetting process. But I found out I didn't like being there. And I was able to change my path, meaning I thought I wanted to be in a big company, but I don't know. It just like, it's not that cool. Being a leadership is hard. Being a boss is difficult. Running a large organization is not fun. So I'm like, So I went back to the Silicon Valley, and my first jobs were like, one of my first jobs was working at Apple. Yeah. And that was a great company, but there were a lot of things I didn't like about it. I went to Apple University. I became an Apple technical coordinator and all that kind of stuff. But ultimately, I didn't really like it. And so then I went somewhere else. I went to Cisco Systems, and I oversaw 40,000 marketing people at that time globally. So I ran a global database. So I was a database administrator in the marketing department. And anyway, so I worked for that great company, and the talent was top notch. But ultimately, I'm an entrepreneur, and I don't like working in big companies like that, So anyway, so I went after my entrepreneurial idea of using the internet to recruit, manage, and retain people. And it was, but I was quite young, and I really didn't know how to do it. I didn't know anything about venture capital and all that kind of stuff. But then I went into more media, and I almost made it. So anyway, so you get there, and there's all these vetting processes, right? And so moving toward Forex, running a hedge fund, being licensed and registered from the National Futures Association, passing the Series 3. Like I've done all that in the Series 34 and I think a couple others. But the funny thing is, the average guru on YouTube doesn't do any of that. You don't need any expertise. You don't need any background. You don't need a track record of success, right? So my formal education is macroeconomics. I got that degree from Harvard, and then my master's degree is in financial management, also from Harvard. Once again, there was a vetting process. 99%, more than 99% of people that applied for that program at Harvard was rejected. So again, I passed some sort of weird vetting process. Passing the Series 3, 70% of experts that take that test fail. But once again, the NFA vetted me, right? And so it's all that kind of stuff. FBI background checks, all these things are required. And so I'm here to serve you. And if anything, I'm trying to get it so that I'd like you to ask great questions. I'd like you to dictate where we go today. Yes, we got news in 45 minutes, and sure. We could talk about that technically. We could talk about it fundamentally. We can talk about trader psychology. We can do things like I can teach you how to scalp. I can teach you how to spot. I can teach you how to swing. I can teach you how to raise capital and run a hedge fund. There's a lot of things we can talk about, and I'm bringing all of this to you for free. That's all. That's it. And so you have an opportunity to, let's say, ask a little more of me than the average YouTube guru. Okay, that's all. I'm here to serve. Okay. And Tim's like, now, AI. Yeah, so I run a lot of AI businesses, which is really cool. But that's the nature of the beast right now. You're either on or left behind. Yeah. By the way, if you need a broker, I recommend tradersway.com. They're an ECN. It means they have a business model different than most brokers. Most brokers make money if you lose money. That means most brokers have a business model where they actually want you to fail. Think about that. Do you want to work with a broker that wants you to fail, that would financially benefit if you blew up your trading account because you don't know what the heck you're doing? Traders Way is different. They're an ECN. You place a trade, it goes into the liquidity pool, and then you're into the interbanking system. So they need you to survive and thrive for them to succeed. So if you like that, check them out. So today we're going to use one of my services called Quant Box. We're gonna look at this and just kind of see where we are in the world. But Quant Box, right, helps you uncover the best fundamental investment opportunities across the global markets using artificial intelligence to do all your macroeconomic research. Think of it like a Bloomberg terminal. Ooh, I got to remove that. Think of it as a Bloomberg terminal, but instead of being $2,200 per month, it's $79 per month. Oh, I'm in the wrong browser. Hang on. Can I even pop this out? Hang on. I'm in a wrong browser. Let's open a new one. I think this should work. So yeah, it's on the Google Cloud. And so I got to be logged in properly. Yeah, there we go. So this will give us, it looks at long-term macroeconomics and then does comparative analysis between, let's say, the two currencies on a currency pair. But it also does market sentiment, and that's why I want to do this right now, okay? If you're interested in checking it out, okay, pretty simple. All right, so let me zoom. We'll take a look. So yields have come down quite dramatically, which is really good. This is very risk on, very positive. Very happy with that. Just a week ago, we were at 410. Now we're at 3.8 and falling, which is really good. So it's moving in the right direction again. That's right as rain. That's some risk on. Oil's been all over the place. I was long at 75. I went to 77. And then now, okay, so now I'm out again. It dropped as low as 73. But I am deciding when I buy it back. So I busted out a break even. I'll probably, I don't know. That might be something I end up doing today. Gold is rising with this risk on that appeared yesterday. Rumors of peace in the Middle East, but then, Facebook and Amazon and crushed it. Apple didn't do that great. But I expected that. But, when you look into the internals of the financials of how Meta did so well and how Amazon did well, it wasn't sales growth. Their profitability came from laying people off. Oh, well, I wonder how long that's sustainable. So, okay, interesting. I thought it was interesting that Meta has announced a dividend payment. All right, that's interesting. But nonetheless, maybe this rally was short-lived. Okay, so we'll have to pay attention to that. I got my eyes focused on this like a laser. Okay, when there's risk on, the dollar is typically weak, so euro dollar up, but not by much. And then, if dollar's weak, Bitcoin's up. So now we're back above 43. Remember, this dropped to 38. So it caught a bid yesterday on that risk on. Japanese yen stock market fairly flat. FTSE has tried to do a rally recently and has fizzled out, and then just vol right here on the Dow, the FTSE, and the NASI. Taking a look at risk gauges here. This has been neutral for about 3 weeks. Loading. It's doing analysis right now. Hang on. There we go. And yesterday finally turned this into longer term risk on. Now, just barely. And so it's looking at like here, the VIX. Okay, the VIX is up a little bit, but not dramatically over the last 30 days. So it gets a score of 0. Okay, yen has weakened almost 3% over the last 30 days. That gets a score of +1. Dollar is strong, however, and that's negative. Remember, when there's risk on, the dollar's weak. Well, over the last 30 days, okay, it gets a -1. Okay, yields have fallen over the last 30 days, and that's good. So that dropped from 4.1 down to 3.9. That's good. Okay, dollar is slightly strong. It's neither here nor there, meaningless. And then now, over the last 30 days, the S&P 500 is up 3.3%. That is good. Okay, 1 plus 0 is 1, plus 1 is 2, minus 1 is 1, plus 1 is 2, right? Plus 0 is 2, and the score is 2. Now, doing the same analysis, looking at volatility, yen, dollar, yields, gold, and the stock market, on a weekly, it's a -1. Yesterday, today, it's a +1, and there's still no clear underlying intrinsic trend. This is a giant red flag, everybody. Giant red flag. There's no intrinsic trend. You see prices moving, but in relation to each other, it's meaningless. You might have short-term relative strength. Maybe you have things popping and dropping on news and rumors and a bunch of things. But when you look at the market like a machine and you're like, I want to look at all the markets and see all the markets on all the different time frames and then correlate them together and then look at the history of what creates these moves. Is it risk on or is it risk off? Is it bullish or is it bearish? And you know what it says after doing all these millions of calculations? Nothing interesting is happening. This is actually just looking at the market. It's not thinking about what the Fed said. It's not looking at GDP between Europe and Australia. This is just what is actually happening right now on 3 time frames and in 6 markets. And I'm thinking about adding the put-call ratio to this as well, because this is showing us what other people are thinking, what other people are doing. And you can get yourself into a trap where you think you see something, but you're really being lured into the rocky shores by sirens. So please, shields up, red alert. Be careful, okay? Be careful. There's no intrinsic underlying trend. Now, looking at the scatter plot, this is happening right now. Okay, it's happening right now. This is real-time kind of stuff. And what a scatter plot shows is that Quant Box has looked at the economic data of these assets, in particular pairs, and has scored them either negative, which means they should be falling, or they're given a positive score, which means they should be rising. Doesn't mean they will, it just means they should. Logically. Okay? Best on comparative analysis of macroeconomic data. Things like institutional positioning, things like GDP and inflation and interest rates, all these different things, right? So there's your positive scores over on the right, negative scores on the left. And then over on this part here, on this axis, you can see, are they making money right now today, or are they losing money? Okay, so making money is up, obviously, losing money is down. Now, this scatter plot is combining what should be happening with what is happening. So Bitcoin is way up today. It's up 2.5% so far, and it just has a slightly bullish score. But what this is telling you is, Quant Box said, it's bullish. S&P 500 is up today, and it has a score of 4. So that's why you get, like, in this scatter plot, right? All right, so like when you see S&P 500 is up just over 1%, and it has a score of 4, okay, that means that asset is bullish because it's up, and it's expected because it's to the right. So this is the stuff that you learned in elementary school. Do you remember? Okay, a negative times a positive is a negative. Okay? A positive times a positive is a positive. Now let me get rid of Bitcoin because it's skewing. Okay, we call that an outlier. It changes the skew. So let me go back. Okay, so let's go back to what I was saying. A negative times a positive. Why would I do that? Well, these assets are up, but they have negative scores. These are up and they have positive scores. These have positive scores, but they're down right now. Okay, and this has a negative score. And it's down today. So you might remember this as positive times a positive is good. That's bullish and expected. A negative times a negative is a positive. That's good. It's positive. It's bearish and expected. So anyways, these things are performing well right now. Not a lot down here right now, a lot of green on the screen. But the thing is, these might prove later today or early next week to be your best selling opportunities. So you actually want to open your charts today and do technical analysis and see if they're rising up into resistance or a lower high or a Fibonacci zone or a bearish selling pivot. And they might be a trade later today that falls or early next week that falls because they're up, but that's unexpected. So actually, you want to kind of look at it this way. These things are working, so it already happened. These things are not working, they're unexpected, so maybe they're dips. Like in a bullish move, you want to buy a dip. In a bearish move, you want to sell the rip. Cool. So these might actually be your good opportunities. So you take note. Euro Aussie, pound Aussie. We might be into this, right? We might want to do that. We might want to buy these things. Your USD Swiss franc, maybe that'll be an opportunity later today. We don't know, but you put it on your list. Okay, so anyways, NFP today. Later today, the commitment as traders report is going to be updated. Okay, so on Monday, remember, I'll review this with subscribers to Quant Box. But what you want to look for are two things. This is all the institutional money. You see all this? This is how much silver is in the vault of institutions. This is how many dollars are in the vaults. How many shares of the S&P 500 are in the vaults? Are they long or are they short? Okay? This is the week over week change. So it's the cash flow. Okay? So money went into oil last week. Money went into the 10-year T-note, dropping the yield. That's why the yield fell from 4.1 to now 3.85. Money is going into that asset and dropping yields. Cool. That kind of stuff, right? So, but we'll go over that. And here's the comparative analysis of the assets. And this shows you, can you see the euro dollar coming down as the capital stock is falling? Yeah. Okay, capital stock is falling. Okay, the currency pair is falling. Then the falling stops and the price of the assets start rising again. Yeah, it's really neat. This is where you just have less bears, and this is where you have actual buyers. And for a while, we've been having less buyers. So you can actually see, like, did money go into oil? No, we actually just had less bears. So there was not actually a bid on oil. This is what I'm looking at the top. But there was lots of people betting against oil going up, and 27,806 contracts on the short side. We lost 26, almost 28,000 bears. We lost them. They left. Doesn't mean they're buying. The market actually didn't buy more, but we lost 30,000 bears. So earlier in the week, we had a pop in oil. Well, it's because everybody took profit, you see? Or in this case, these guys got out. These guys were profit takers. These guys got out of the way. They probably lost money and capitulated. So anyways, we can see this by observing the facts. Okay. Yesterday was Fed Day. Boy, what an exciting day. Was it yesterday? No, the day before. Sorry, yesterday was a crazy day. Crazy. So if you're not sure how monetary policy works, I invite you to visit Investor Bootcamp. It's $88 a year. It's really, 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 really affordable. And there's 100 hours of training for the $88. So there's a monetary policy course that's probably 12 to 16 hours long that will teach you central banking. And by hour 3, I'm teaching you how to manage the balance sheet of a commercial bank. You see? So if you really want to know central banking and monetary policy and its impact on money supply and the economy, if you want to learn how banks work and all that, dude, you literally need to do this. I'm not ashamed to say it's an $888 course that's 90% off. I mean, it's you must do this. You must investorbootcamp.com, pay the $88. It'll blow you away. So anyways, you should know what all of this stuff means. Nonetheless, what Quant Box does is allows you to do your research, and you can look at interest rates and inflation in the future. In fact, this is a database, not a website, so you can actually manipulate the data, okay? And you know what this is telling you? Look at it, inflation in the fourth quarter of 2025. Okay? And at the same time, what interest rates will be in the United States. Oh my God. So then you're probably saying, yeah, well, Wayne, how does it make this guess? Oh, this is not a guess. There's no guessing at Quant Box. This data, and it's seen here, this is the same data displayed differently. Okay, this is over that time period. Let me add a little more time. See, it's pretty, right? It's awesome. I mean, dude, you can't imagine how much work has gone into this. But anyways, what this is showing you is that Quant Box is getting the data from the Fed economic staff. But we also have this data for New Zealand, Japan, Bank of England, ECB, Swiss National Bank, Bank of Canada, Reserve Bank of Australia. Okay, so we tap in, and this is what the central bank thinks. This is what the Reserve Bank of Australia's economic staff has projected. Quant Box is not guessing. We're pulling it from the RBA. And this is what the RBA thinks. And so then as we get new information, they update their information, we update you. Okay? You see? Well, Lewis is saying, well, can you talk about whether the dollar is going to weaken or strengthen? Well, this is it. This shows you everything. Okay? So here's your answer. There it is. You see? And you're like, Wayne, I don't understand this. Look, what's it say? It's even quantified it out to 2026. There's also another thing you could look at is seasonality. Okay, what's happening relative to what we think is going to happen. So let's pick an asset. Let's pick, what do you guys want to do? Dow? You want to do Kiwi dollar? Yeah, let's just randomly do one. Okay, Kiwi dollar. Okay, historically over the last 5 years and over the last 20 years, Kiwi dollar falls in the first month of the year, and it did not this year. So, Lewis, that's dollar weakness, right? There's some sort of risk on that's happening right now that's unusual, statistically speaking. Oh, well, why is that? So maybe we look at the S&P 500. Okay. Well, that didn't draw right. Anyways, S&P 500 has a bit of a up, and it's done okay. What about oil? No, let's not do oil. Let's do NASDAQ instead and see if that prints differently. Okay, so here's the thing. We can really get into the details. Oops. We can really get into the details here. This is week by week NASDAQ over time. Okay, in week 1, it's typically a down week. Week 2 is typically an up week. Week 3 is typically an up week. Week 4 is typically an up week. Week 5, which we're in, is typically a down week, followed by an up and up, and then down, 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 down. And when you look at it cumulatively, there's like an up and then a down, and then an up and then a down, and then an up and then a down. And this is just looking at, let's say, every week 1 for the last 10 years on average, what did it do? And then I added this recently, one standard deviation and one above and below. And what this represents is when you look at a data set, you want to look at the variance. And these the standardization is really, you're taking all the different variances. So these are all ups and downs from an average, okay? Now, how big are the ups and how big are the downs, right? And you want to look at all that data on the data set, and then you want to standardize those deviations. And so you take the variance and you square root the variance and you get a standard deviation. Well, these are actually 2 standard deviations. And what it represents is 95%. So 95% of the time, the NASDAQ stays in this range of variance of it has up weeks and it has down weeks, but that's normal. And apparently most of the time it's up and it slowly accumulates. Great. But you want to know the outliers. And you could look at this as a time to buy. And you could look at this as a time to profit. Because it's outside of 95% of normality. This might be a time to buy. Okay? And so on and so forth. And now you have a shape to the NASDAQ for the year. And you even know, like, between week 9 and week 12, let's say. In this zone, okay, and it's not drawing properly. Let's see, now I have to reset it. Reset zoom, export, no, reset zoom. Okay, so you know, like, let's say between week 8 and week 12, you're probably looking for opportunities. Around week 26 to 27 to 28, sort of in here, you probably want to start looking to take some profit and then come back into the market down around week 39 or week 40. Oh my God! So anyways, so that's where we are now. Interesting. Okay, there was a bit of a dip, and now, maybe some upcoming, huh? And this is the same shape as this. That's all. But it's comparing 20-year average and the 5-year average. Just so you know. So now you know how to plan things in advance. Isn't that cool? So we need to move, but I'll just show you where we are so you can organize all your thoughts, bullish and bearish and neutral and all that, and how we got there. Okay. But just quickly, I want to look at the swing trade. This filters this out. I want you to look at the market from a bigger point of view than your 15-minute chart. So this is showing the last 7 days, the last rolling 7 days. The most profitable assets right now have been Bitcoin and gold and Dow and the Japanese stock market. Okay? But by far, Dow, gold, Bitcoin. Okay? The worst performers is the yield, which means the yield has come down, which is actually good. Very happy. Okay, I'm short at 5. We're now at 3.86. Oil's come down sharply, which is too bad. I was long that earlier. USD Swissy down quite a bit. USD ZAR down, which is good. So down doesn't necessarily mean bad, but South Africa crushing it. Yep. Okay. Cool. But going back to Lewis's question, I think what he's just saying is, dude, just tell me now. Is dollar for now going to be stronger or weak? When NFP comes out, is it going to be stronger or weak? Let me answer that. First of all, you got to have a bigger view of the world than that. But that's what this tool is telling you. Okay? So on the short run today, AI is saying you should probably be very cautious about trading at all. In whatever you trade, it's likely to be short term and choppy. But you do you, says the AI. Okay? On the medium term, like swing trading, it's also telling you, hey bro, nothing's going on. So whatever you're trading vol, and vol is risky. Now, going out to the longer term, okay, we have ever so slightly positiveness. Slightly. And this could just in a heartbeat go the other way. Just one asset needs to change, and this just goes away. But let me answer your question, Lewis. Should it go up or down? Well, in a risk-on environment, which quantitatively exists now, but just barely, you would buy the Aussie, or let's say consider buying the Aussie. You still have to do your technicals. You would consider buying Euro, you'd consider buying CAD, you'd consider buying Kiwi, you'd consider buying gold, you'd consider buying the S&P 500. But, and here's your answer to your question, you would consider selling dollar. Now, if this went risk off, these would flip, right? If it was risk off, you would consider buying the dollar. So I don't know the future, Lewis, and I don't know your opinion. I don't know the level of research you do. But you want to boil it down to risk on or risk off because that's what creates the dollar's strength or weakness. Okay? You see? But right now, the real answer is niet, neither. It's neither strong nor weak. Okay? And by the way, you see all these things? They don't click. Quant Boxers, I'm going to have to do pretty soon, probably next week. Certainly by the week after that, I'm going to unveil these new upgrades that I've added to Quant Box for free, right? For free. People have been working on this for weeks, actually months. So we got some new tools that are being added to improve fundamental analysis. Because our original tools, like the carry trade tool, it's a bit primitive. It's a bit primitive, that kind of stuff. And so really, I think what'll happen is, I'll retire some of these tools and that information will be in the new tools, just so you know. Cool. All right, let's go to the charts, yo. For that, I will use my Trader's Way account. Okay, do you have questions about the headline number for non-farm payrolls? Well, let me answer it this way. We're still sensitive a bit when it comes to the headline number. A big number is still bad. A low number is still good. And that confuses a lot of people, but that's behavioral finance. And so we could talk about behavioral finance if you want. But here's the real thing, and I'm sorry to burst your bubble. But generally speaking, this non-farm payrolls is irrelevant. Nobody cares. Why would I say that? I'm peeing on my own shoes. Well, here's the thing. The only thing that matters right now, let me say that again, the only thing that matters right now as a Forex trader is that the Fed is not going to cut in March. A couple of days ago, people thought they were going to cut in March. No, they're not. And now they're like, oh my God. Well, I guess they'll cut in May. No, they're not. No, they're not. Okay. So nothing is likely to be bad enough or good enough to have any impact on that decision. So if the Fed doesn't care, why do you care? Well, it'll create some volatility. There's enough dumb money, including institutions. Let me tell you, people used to say dumb money was retail traders. Let me tell you, there's plenty of dumb institutions. I've lost a lot of respect for institutional investors over the 20 years I've been doing this. So yeah, there's tons of dumb money, like extraordinarily dumb money. So you can be smarter and more informed than a $1 billion hedge fund manager. For sure. We can destroy these guys. But you got to have a bigger outlook than the next 2 hours. In the next 2 hours, we will have some volatility. But ultimately, as I just shown you, there is no underlying trend. Right? Lewis says, hey, is it dollar going to get stronger or weak? No. I'll let you know when it happens. But remember, it's not just dollar. We need to look at yen. We need to look at volatility. We need to look at the S&P 500. We need to look at gold. We need to look at yields. We want to see all institutional investors doing the same thing their way. If it's all risk on by all investors in all marketplaces, everybody's like, oh my God, it's risk on. We will see it as currency traders and we will sell the dollar and we will make money. If it's like, oh my God, this is horrible, we will see it across all asset classes. All institutional investors see the same thing, come to the same conclusion, and they do what they do to get things done. We will see, oh my God, it's risk off. We will buy the dollar, we will buy the yen, we'll buy the Swiss franc, and we will likely make money. Right now, we don't have any clarity on any direction, and yet retail traders very often just do the same thing they always do. But the thing is, they don't know what they're doing. So I will try to protect you from that. So ultimately today, ultimately, and I'm sorry to burst your bubble, it's probably irrelevant. But you'll get some vol. Remember, volatility is bad, but you do you. So right now, looking at the longer term trends here, okay, dollar has been more weak than strong, which is actually, this move here is unusual. This dollar strength is usual. This little drop that we just had is unusual. You should know that. So maybe this drops to around here and we can pick up a dip. Dip on the dollar. Okay? Pound is at resistance. Kiwi is at support. Yen is in the middle. Look, quite literally the mean. But obviously in a long-term downward slope. So are you buying this or are you selling something that's been down for a long time? Well, to answer that, you need to understand yield curve control from the Bank of Japan. If you don't do that, you don't know what you're doing. CAD, bottom of the range and struggling. Euro, bottom of the range and struggling. Aussie, it's really an interesting spot because it has been in a downtrend for a very long time, but is finding support on a new upward, or let's say older upward, and it's climbing. And the interesting thing here is the potential for Chinese stimulus. Okay. So that could become interesting down the road, but right now, rumors and dollars are two different things, huh? So let me get the FX Street calendar going, and we will get the news in real time. FXStreet.com/ for some reason it actually didn't come up. I'm on the wrong browser again. I think it's just economic-calendar, but I have to pop it. Yeah, sure enough. So here we go. Cool. So the subcomponents of non-farm payrolls, hourly earnings, we don't want that to go up. Okay. Poor countries have wages that go up. What happens in rich countries? If only poor countries have wages that go up, how could a rich country have wages that don't go up? What's the distinction? Type in a question mark if you don't understand. I know it's a convoluted question, but maybe you'll understand the answer better than the question. Rich countries are productive. Okay? Rich countries are productive. And they produce so many things that prices inevitably fall. You never need more money. You don't need more money because everything around you gets cheaper through competition, through an increase in productivity and lowering of costs. Therefore, you can lower the prices. And for capitalism, it's always a race to the best product at the lowest price. So you never need more money. Everything gets cheaper and cheaper and cheaper. On the consumption side. On the other side, on the investing side, everything that you bought 10 years ago has gone up in value. So, but that's different, okay? So now you're not poor, you're rich. Everything that you consume gets cheaper and cheaper. Like suddenly you can go to like Sam's Club, like Costco, and buy a tomahawk chop. That used to be extraordinarily exotic. It used to cost you hundreds of bucks. Now for $28, you can buy yourself a tomahawk. See, everything gets cheaper. So what happens is your standard of living goes up. Now in a poor country, your money doesn't buy you anything. So now you need more money to buy the things that you need. Because your country's not productive. For example, you don't keep your money in a bank, you hide it under your bed, or you put it in a can in the refrigerator or in the freezer. So that money doesn't go through the fractional banking process. It doesn't get loaned out to your neighbor for a mortgage, so therefore home prices don't go up. It doesn't get lent to the small business person down the street. Therefore, you don't have any products or services available to you. So you end up being poor with very little to buy, and yet the things you need to buy are too expensive because your money is worthless. Okay? And so really, you don't want wages to go up. That's bad. You want wages to be the same, but you want productivity to go up. So let's check it. It's probably going to be more than 180. Oh yeah, it's way higher. 353, that's ridiculous. So that might be very bad for the market. The market might say, no cut in May, now you got to worry about June. All right, well, I've been saying that since November. So that's a redonkulous number, and I would suspect it's bad, and so far it's bad. Thank goodness. Oh my God. So actually, I've been praying for this all morning. Sorry. Hey, hope is not a strategy, but praying never hurts. I've been praying for this. Yeah. Higher for longer, Osamu. Yeah. Now remember, this is all about vol. Where do you go to Investor Bootcamp? Try investorbootcamp.com. I don't even have that on. Yeah. Okay. Yeah. A whole new world. Yeah. So, yeah. So hang on. I'm watching this pretty closely. I want this to come down. Yeah. Anyways. We'll flip around a little bit, but this is indicative of risk off. The behavioral finance component to what you see is the numbers red hot. There's lots of jobs. The economy, right, is not slowing. And in that situation, that could create inflation. It doesn't mean it will surge, but it could prevent it from slowing. It could, dissuade disinflation. So nonetheless, a bad number would say, okay, hey, Fed, everything that you've been doing now is starting to work. All the lagging effects are starting to take a hold, and inflation's going to fall based on what you did a year ago. So you can adjust your policy because the economy is going to slow, and if you don't adjust it, will actually fall into recession. And okay, well, that would be good because the bad number would predict the Fed changing their monetary policy, but to cutting interest rates, which would make money cheaper, which would support the economy by making companies in the stock market more profitable. Therefore, the stock market would go up. Mortgages would come down, so there'd be more demand to buy houses. leases and car loans would come down, be more affordable, and suddenly you'd buy a Tesla again. Remember, Tesla's down 25% right now because nobody can afford the car lease. So if leases come down, well, maybe you'll come into the market and buy yourself a Tesla. You see? So all of a sudden, that changes everything. And what just happened now was the opposite. Everything is great. Everything's good. Consumers are making money. They all have jobs, or they think there's plenty of jobs. The market is red hot, smoking hot. Hot to go, HOTTOGO. So there's no need for the Fed to cut. Snap! March is off the table. May is off the table. And it's all been priced in, so this is pricing out. They're pricing out cuts. And so that's the behavioral finance, huh? Cool, right? Good, Frank. Well, Frank, that's what we discussed days and even weeks ago, huh? Good. Well, you either trade before the vol or after the vol. So I've been teaching the same method at FX Street for 20 years. Yeah, let's bust it out to a 5-minute chart. Just you can see more. You you do something like this. Like that. That's probably. I could probably do that, Jimmy. I'll do that in a bit. Yeah, Richard. Well, to be fair, it's completely different math and different data sets. Cool. All right, let's take a look around the world and see who else is what's up. Take a look at commodities. Yeah, and I got taken out of this. Like, holy smokes, I'm so glad I had to stop. Oh my lord. Oh my God, I don't even want to look at that. that's on a 4-hour. Why don't we drop into like a 5-minute chart and check out that volatility? See, on a 5-minute chart, you probably want to, like, you would draw this, and then you draw this, and then you draw this, and then you draw this. So what do you think? Somewhere around there, a sell zone? Okay. No, we'll get there, Jimmy. J. Paul? Paulie? Jimmy Paulie? Yeah, we'll get there. Ooh, complete reversal on gold. Let's do this on a smaller time frame. I want to look at that. And I have to back out to fit the target now. So the target, the conservative target was here. And the actual high was here. Oh, that's close. Oh my God. 2070 and it went to 2065 and a half. Oh my God, that's so close. So I have to explain this. Okay. Let me explain this. So I started another AI company. And AI that only does technical analysis. And it said in here, okay, to have a trade plan that takes you to 2070. Maybe a little higher, but 2070. Remember, it doesn't know anything about news. It doesn't pay attention to the Fed. It doesn't pay attention to non-farm payrolls. It only does technical analysis. And, that was close, huh? So that new company hasn't officially launched, but it's called Traders. Okay, traders.co. Radars for traders. Okay. And so what it does is it looks at, let's say 100 assets on 5 or 6 different time frames, and then it looks for 8 common patterns. And then when it finds the patterns, it remembers all the previous times that asset has had that pattern on that time frame, and then analyzes how often that asset on that time frame with that pattern has actually worked out or not worked out. So then of the, 6,000 different opportunities it's analyzing, it'll tell you the 5 or 6 that it thinks are most likely based on analysis of past performance, which does not predict future results, but it will give you a probability. So it'll say, well, we've seen this before on this time frame, on this asset. We've seen it 14 times. And of that, let's say 10 times it's worked, 4 times it's failed. Here it is, and then it draws the pattern and gives you the target. It doesn't predict future results, but it will quantify past performance. And then you can make your decision whether you like that. And it draws it. So it literally, on my back office, I have nothing I can show you now, but I was explaining this, that this is what the trade plan actually looked like that the AI developed. So let me do this in black. It literally drew this price, or this channel, this line. It literally drew this one. And then it literally drew an arrow, and it literally drew this box. Okay. And it suggests a stop. It suggests the entry. It moves the stop. Okay. Now it only moves it to break even. Okay. But it put all of this together like a week ago. right? Now, Richard said, you said gold would head south. That's my opinion. This is just the AI. This is what the AI said, and boy, did it get close. Okay, it predicted a $70 move on gold, and it only moved $65.50. That's not bad. And remember, I was saying down, but it did go up as expected. And like, okay, but and it does a lot more scalping and spot trading than I do. So it sees a lot of things on the short run. So it'll say, 82% chances pops another 25 pips. And I'm like, oh, well, I don't really care, but it does, which is interesting. So I don't know. It's cool, right? So you should sign up, and I'll let you know when you can check it out. It does stocks and stock indices. So it'll look at like ExxonMobil. It'll look at Nvidia. It'll look at Amazon. It'll look at Apple, as well as the DAX, the FTSE. Okay. It does a ton of crypto. I don't know if it does too much. I don't know. I'm going to cut out most of the crypto. There's just stuff on there I haven't even heard of. But nonetheless, we have the data. Okay. So anyways, yeah, cool, right? Yeah. So that's on its way, and that's what it did. It was kind of cool. Right on. Interesting. Let's see. So Brent and WTI coming down. The vol's been extraordinary. It was 79, now it's 73. I think I owned it at 75, but I'm long out at break even. What we're finding is it's now 2 standard deviations below the mean, and that if you're a bull on oil, you could start looking for reversal patterns on small time frames and give it a shot. Okay. So like, look, I have it set that way, but let's say you were a bull, you probably want to look for a down, an up, a down, an up, a down, an up, a down, and an up. This is just a 5-minute chart, so you got to know what you're looking for. So on the higher time frame, it's sloping this way, and this is supportive. So now you want to, if you want to engage, you could do a couple of things. Wait for the higher low, higher high, and then engage. Or maybe it double bottoms first. Okay, and then you buy a bottom, or you buy a breakout. But the thing is you're RWA as a bull. Okay. Bears are just trading short-term price action, and you've probably already missed it. If you're a bear and you're not on stuff like that, I'm not sure you get it. I'm not sure you get it. Yeah. Latte Cafe says, does traders have a radar for bonds and treasuries? I have a meeting on Monday at 11 a.m. to discuss that. So the answer in my prototype, so to speak, is no, but I'd like it to be a yes. I also asked for grains, for example. Oh, wouldn't it, or others like I actually asked for like wheat, for example. But what about iron ore and coal? Yeah, I might be into that. All right. Rahil has a question about Swiss franc and interest rates. How many Swiss National Bank and governmental economic reports do you read about Switzerland on a weekly basis? How many official economic or central banking reports do you read from the Swiss National Bank every week? There you go. So right there, we've uncovered something. All right. Jordan, the head of the Swiss National Bank, and his team, and his economic staff have concluded that they are not going to cut interest rates at all. I know this. I've read the reports. I read every week. All right, so let's go back to Investor Bootcamp. Let me show you. This is not an expensive program. It's designed to be accessible. I've designed this so that everyone that cares about their trading and investing will join. Okay? So yeah, here's all the training, right? So we go here. Trade planning, swing trading for 300 pips, Forex basics, principles of price action, central banking essentials, day trading, macroeconomics, trading oil. I'm going to release this one soon. Okay, it's all there. But let's go further. And I think I added this here. Yeah, I did. Cool. I've added a blog. And in this blog, okay, I share with you the research that our swing and day trading groups do every week. Okay? It's cool, man. It's cool. We actually download the reports, and I spend a couple of hours every Tuesday reading all the reports. Okay. So we can, for example, let's pull one up. Consumer Price Index. I pulled it up. Here we are, and we have the actual economic data. And I go through this with the teams slowly, and then we discuss what it actually means, the story between the lines. And then very often we compare this, how does this compare with euro or the pound or Australia? And we can do that because we probably just read a similar report from the other country. So here we are doing CPI in Switzerland, then we do retail sales in Europe, then we do CPI in Japan, then we do retail sales in Australia. So and then CPI in Australia. So now we got CPI in Australia, right? CPI in Japan, CPI in Switzerland. Here we are doing CPI in China. And now, as we're reading these reports, we just talked about the other countries. And so now it's fresh in our mind, how do they compare? How are they similar? How are they different? And then we read the reports so we see where the inflation is. So, for example, I know food inflation is down 6% in New Zealand, but food inflation is up 6% in Europe. I know this. Okay? Rahil, you see, doing that kind of stuff is very, very important. And then, of course, I can track all of this with with Quant Box, and Quant Box will tell me that Switzerland is bullish relative to Europe and UK, as you asked. Now, why? Why would the Swiss franc be bullish versus the Kiwi? Well, if you read these reports, you might know. But also, we do this by graphing monetary policy. So let me pull up the QB again, Quant Box. So this is a different service I own. Okay. And when you go to central banking and we do comparative analysis of future monetary policy, okay, Japan's going to raise interest rates if Switzerland cuts, and it'll be not this year, next year. They'll only cut a little bit. So they will be less bullish than yen, but less bearish than Australia, significantly less bearish versus New Zealand, Bank of England, Fed, and CAD, because these central banks have already told us they will cut. And by how much? They've actually told us. This is not a guess. This is not an assumption. This is what the central bank staff has told us. I just gather it for you and display it graphically. So if you see pound Swissy fall, it's because Swissy is less bearish compared to Bank of England. Switzerland is less bearish compared to the Reserve Bank of New Zealand. Swissy is less bearish than the dollar. Swissy is less bearish than Canada. What does that mean, less bearish? Well, it looks bullish relative to CAD. CAD's going to slash and burn interest rates. Do you want to see it? Okay. Here we are now. Here we are now. Are they going to cut? No. Are they going to cut next quarter? No. Are they going to cut in the third quarter? Yes. You see? Interest rates in Canada are going to drop 5.25 down to 5. How about the fourth quarter of this year? Yes. The Bank of Canada has already told us their cutting schedule. I know it's factual. People on TV guess. Let me tell you, institutional smart money is mostly stupid. It's broken my heart. We already know the facts, and people on TV guess. It's terrible. Well, what about Switzerland? Okay, here's interest rates now. Are they going to cut this quarter? No. Are they going to cut next quarter? No. Are they going to cut in the third quarter? No. Are they going to cut in the fourth quarter? No. Are they going to cut in the first quarter next year? No. Maybe second quarter 2025. Now, keep in mind, this updates. That's all we know now is, and I knew this because I've actually read the reports. So this is quantitative numbers pulled out of the Swiss National Bank, but I've actually read the reports. So now it's qualitative analysis by reading the reports. It actually says in English using words, no chance in hell we're going to cut interest rates in 2024. I know it to be truth. So I have facts and I form opinions around facts. Well, I call that bias. And I'm like, I have the chance to be bullish probably later this year, though, because we need a monetary policy change from the Bank of Japan. But if that happens, I'm probably going to be bullish yen. And relative to everything else, just neutral, like not bearish on Swiss franc. Not in 2024. Are those swap pricing? No, interest rates. They're literally interest rates set by the central bank. So swap pricing is based on what the market thinks the central bank thinks. These numbers are simply the numbers the central bank has told me. They call me, Wayne, we want to run this by you. How do you feel about us not cutting interest rates this year? I'm like, yeah, I'm good with that. But, keep one on the books for the second quarter 2025. And Jordan says, yes, sir. That's a good idea, sir. And I'm like, all right, get back to it. Now, it doesn't actually go down like that, but we tap into the database and pull the numbers. This is the Swiss National Bank's opinion. So I can look at you straight in the eyes and say, Swiss National Bank's not going to cut interest rates. But you know, when you asked that, Raheel, did you notice that I knew it instantly? Why? I have the hard data, but I also have done all the soft research, the soft data. I've read the words they've printed on paper, or at least PDF, and they are very clear. They're not going to cut, so I'm a bull. Now, here's the thing. For some reason, 99% of people are unwilling or incapable of doing the work. So I do the work with you and we get it done. I read the report and other Investor Bootcamp subscribers read the reports with me. I do the homework with people. And having a macroeconomics degree from Harvard doesn't hurt. And then what? Then I post it here just in case somebody wants to go back and do it themselves. But I know, quite frankly, no one's going to do it. Posting this is a complete waste of time. Probably. If anyone reads it, somebody that actually attended the meeting went back and read something. But I can post it for free and say, hey, everybody, you should read all this stuff. No one's going to do it. They're not. But people wonder why they can't trade consistently. Yeah, I wonder. It's really bewildering. You know why? Because you don't do the work. I'll tell you the secret to success in Forex. You have to have a ridiculous, sickening work ethic. And you need to know what to do, not just sitting down firing off trades all day. Reinforces bad habits. Okay? You could play golf twice a week for 30 years, but never take a lesson. Guess what? 30 years from now, you're going to suck at golf. Let me tell you, if you golf twice a week, let's say for 10 years, so 100 times a year for 10 years. Okay, you're going to go golfing 1,000 times. If you're right-handed, your drives are going to be high to the right. So after slicing a couple out into the woods, by the time you get to hole 7, you're going to overcorrect and hook it way left. But by and large, you suck at golf. But you've done it 1,000 times. Yes, you've done it 1,000 times wrong. I suggest getting a coach and building positive habits and building positive processes. Okay? For example, and I've studied the golf industry back when I was a venture capitalist. We did some research on this. The number one mistake that amateur golfers make is they don't even aim. Not only do they lack a strategy, they didn't have a caddy like walk the course and plot everything out. No, they rip it and grip. They grip it and rip it. And the ball lands wherever the ball lands, right? And off they go. Amateur golfers don't even aim. Amateur traders have no idea about fundamentals, so they have no strategy. And then what happens is then they just log in and they're like, hey, what's up, fellas? What are we doing today? Are we selling the dollar? Jesus, criminy. You're dead. You're dead. A professional that has prepared and has a strategy, has experience, and has planned things in advance will run you over, destroy you, humiliate you. So you need to change your evil ways. Investor Bootcamp will help you there. Trust me, pay the $88. You will not be disappointed. And then you might want to join a live group and learn how to do that. Yeah. All right. Oh, I'm back in the profit. Oh my God, on this one. Let me zoom in. I just got to see it. Oh my God, I did it. Oh my God. What time is it? Oh, when the stock market opens, I have some work to do. Yeah. So anyways, yeah. Man, life is good though. Look, I know that was bitchy and preachy. I apologize for that. It's been a long week. But these things are important. This might be this was a hedge yesterday, guys. This was from something else. Yeah, and that's why, because this is just my coaching account. I threw this down because I wanted to talk about it, on Monday or something. And where did it go? It must be over here. I want to talk about it on Monday. Oh, where did it go? And I wrote it out, 3x triple hedge. It must be further out. There we go. So in that zone, I hedged my cash position. So I run a pension fund, and maybe just maybe I'm going to get news today or Monday. I might now be the strategic investment advisor to 3 endowments. And anyway, so I'm sweating bullets because I hedged, and of course I hedged over here. I hedged here, so it would have been like, okay, this is my price. The day before was a bloodbath, so I'm always going to sell a lower high. That's how the Wayne do. And then the Meta earnings and Amazon earnings, holy schnocker. It just went ape crazy on me. And I was sweating bullets. Oh my God. So now we're back at break even here. But I really need more. That's actually a buy zone, and that scares me. So I can get out of this, but this is just my coaching account. I don't give two hoots about this account, really. But the pension fund I care about, and I'd be running the same book on the endowments. So this just represents that I am sweating bullets and that I have a real job to do. Okay? Thank you, Darko. And Darko, I haven't replied to your emails recently, and I apologize for that. I got to get better at just saying, I don't know. I guess not responding is insulting, but if I respond to, let's say, a long email, or an emotional email or a detailed email, and I'm like, yes, no, maybe later, it's almost as insulting. So my intention is always to come back, and then I never do. So, but anyways, so I apologize, Darko, but yeah, thank you. Zero says, is it possible to start trading Forex with $100? Well, let me ask you, why only $100? Let me just ask you, why not at $1,000? Well, the thing is, Darko, that's the thing. Like, I'm beyond capacity. I'm beyond capacity. I'm doing nothing but turning away good opportunities. you know, uh, yeah. Um, but man, everything's good. Okay. Let's say Titus Cash. Then you shouldn't do it. This is the sport of kings, Zero. Millionaires and billionaires and trillionaires. All right. So what should you do with your $100? Can I answer it that way? Okay. Investor Bootcamp is $88. And then you should trade for 2 years on a demo account. Try Trader's Way. They're great. In the meantime, while you're studying and while you're practicing what I preach, remember, opening a demo account and firing off 1,000 trades will just make you a horrible trader. So don't even think that way. You need to listen to me. Most people are not coachable. There's all kinds of reasons why people fail. One major reason people fail is they're not coachable. They don't listen and they don't do. The second thing is most people are full of shit. They don't do the work. They want to be rich, but they don't do the work. Well, whatever. Okay? So I need you to have a ridiculous, sickening work ethic, and I need you to listen to me. Okay? And by the way, it'll take a long time for things to click. People tell me 10 years later, things are just starting to click from stuff I said in year one. Because you have to go through the experience. You have to have your own aha moments. But if you can't listen to me, you're not going to make it to year 10, so it doesn't matter. So that's why I make it so cheap. Most people need the education, but they're not going to do anything with it anyway. So, you pay $88, then you'll move on and do something else. Or you're legit. I hope you're legit. So then you actually listen and you practice on a demo account. And let's say over the course of 2 years, you become not bad. Okay, great. Over the course of 2 years, as you're learning and as you're practicing, you're going to work side hustles. I don't know how old you are, so I don't know if you're mowing your neighbor's lawn or you're going to, Uber, or you're going to be an eCFO on the side on weekends. I don't know. But you're going to need to save capital. So 2 years from now, when you don't suck at trading, you'll actually be well capitalized. But this idea that you trade $100 and turn it into $10,000 is delusional. It's a message YouTubers give to poor people to try to sucker them. It's nonsense. It's absolute, total, ridiculous nonsense. Now, some people say, well, I can only learn if it's real money, so I can't learn on a demo, but I can learn with $100. Okay, I get that. I've played penny poker with my buddies, where you're using pennies to bet, and almost gotten into fistfights over like a 25-cent pot. They're like, oh, crap, you can't do that. You're a right? And we're almost friends, almost killing each other over 25 pennies, So I get it. So some people act that way. So look, if you did that because you take it more seriously, that's great. But I actually don't believe that nonsense either. So I personally don't believe it. I don't think you'd get a good return. I think if you watched 100 hours of training videos, I think you'd get a lot of value for $100. And you start practicing some of these things on your demo account, you will start to improve your skills. And down the road, I want you have to have a stack. You have to have a proper stack. So when you start trading 2 years from now, maybe you have 1,000, 2,000, 5,000, 10,000. But now you actually have skills. And from that, you have skills that bring consistency, and the consistency brings confidence. Why does consistency bring confidence? Because you have control in what you're doing, why you're doing it, and how you're doing it. Without control, you will not gain confidence. Without confidence, you're delusional. Some people have this confidence where they say, well, I just know I'm going to be successful. I was born to do this. That's called egotism. So I study things with skulls. Bah! Yeah, I study things with skulls. Where's my ring? Where's my Memento Mori ring? I don't know. I think I dropped it on the floor. But anyways, okay, there's this idea that there's ego and egotism. Egotism is arrogance. You're an arrogant trader. You think you're good. You believe you're good. You know you're going to be successful, but you don't have any decent habits that would lead to that conclusion. You might not do the work. You don't do the planning. You don't have the patience. You don't have the discipline. You don't do fundamentals. Your technicals are sloppy. You don't look at multiple time frames. You don't pay attention to correlation. You don't pay attention to monetary policy. You don't pay attention to seasonality, but you think you're going to be the world's greatest trader. Well, that's egotism, and you will fail. You will. It's a foregone conclusion. And then you'll give up and you'll go try to make money flipping real estate. You'll do that. Okay, fine. Ego means you do the work, you do the research, you have a ridiculous, sickening work ethic. You know the fundamentals, you have a bias, you look at multiple time frames, you understand monetary policy, you understand seasonality, you do all of this research, you wait, you have the patience and discipline to wait for the price action. And despite all of that, you go through a period of losing money. Your ego gives you the strength to stop all the negative results, put a hold on your trading, and regroup because you know you are better than this because you've proven to yourself in your subconscious that you have what it takes, you have the skills, you have the drive, you have the passion, but you do the work. And you will climb out of this hole. People with ego are strong. People with egotism are weak. And the strong cull the herd. Drop the mic. Okay, goodbye, everybody. My name is Wayne McDonell. I love you. Good luck, everybody. Yeah, holy shizer. What the hell was that all about? Jesus. You ain't like my kids are watching, Wayne, and you're yelling at me. Okay. But, look, for some of you, I don't know you. You don't know me. I've been doing this for 20 years at FXStreet, and you don't know me for some reason. I have 5,000 or 6,000 videos on YouTube. For some reason, you don't know me. And there's a good chance I won't see you ever again. So I just hit you hard, and you know where I stand. Okay? And you might love it, or you think I'm the arrogant prick. That's fine. I've been accused of that my whole entire life. But I walk tall, and I have confidence. But I also have the ridiculous, sickening work ethic to back it up. The military says I do. Harvard says I do. The NFP says I do. Right? 20 years of doing this in the business says I do. So I'm just sharing. I'm not preaching. I'm just sharing. I want you to be on my team. Yeah, JGB. Like JGB, Jean-Guy is tough. You watch Jean-Guy. He's serious. He's tough. But he's strong enough to be kind. So when you join boot camp, your peers are second to none. And stubborn. And stubborn. Yeah. So look, if that's who you want to hang with, this is what we do. It's a small group. I don't make millions of dollars running a community. I live a real life. I really care about the markets. I do real things. Yeah. So it's a small crew. Yeah. Yeah, Bruce, it is hard. So, anyways, so I don't have much time with you, but I just had an impact. Um, if you hate me, that's fine. That's cool. It's all right. All right, so let's kind of move around. Let's do some dollar pairs, right? And everyone's like, "Oh, thank God, the dollar pair." Yeah, yeah, we're a tough crew, right? Like Denise is tough too, right? Like tough and kind. Jim, tough and kind. Like tough cookies, I'm telling you. Yeah. There's a great video where I interview uh, Jim and Denise in particular, since they're right here. Um, you know, with Denise, it's how to trade like a floor trader. It's so great to learn from the community. Um, it's just yeah, the Jim having decades of trading experience himself as well. Just like there's me, but it's all about us. It's an us group for sure. Yeah, yeah, that's what I'm saying, Kyle. Right? Yeah. Jim doesn't know what he's saying. Yeah, as are others. Yeah, for sure. Yeah, yeah, yeah. Johan, his technicals are great. All that. So, anyways, let's move. Okay, nice. Okay, so that's my sell zone. You guys remember this one? I think I drew this today, didn't I? Did I draw this one earlier today, like before the news? Oh, I think I might have, huh? Or was it last night? It might have been my swing trading group. I think it was my swing trading group. I think I did this last night because Thursday nights I do the swing trading group where we plan out the entire month in advance, weeks and months. And yeah, it's all good. We're not through the support. This is the last chance for bulls. Can anybody confirm this one? Was it last night or was it this morning? Trying to fit this. It must have been last night. Because I'm looking at this. This is a monthly. And we were here last night, huh? Yeah, it was last night. So here's a trade plan. I don't remember it specifically. I remember doing it. I don't remember the context of the conversation because we had, what was it, 3 hours last night? We had a lot of fun. I told a lot of stories, but we had a lot of seriousness as well. I get silly when I'm tired, and I work hard. So, anyways, super silly, but serious at the same time. I know this trade plan because I can see it, and it actually gets us down here. Okay. Yeah, well, the thing is, last night we were at the entry. Okay. And for those that are kind of like, again, we've been talking about Quant Box. I have it open. And, you can break this down, for example. Let me close this. Oh, no, that's open. We can kind of look at this and see what's up. And Quant Box has said for a very long time, very bearish. Kiwi dollar. It's looking at seasonality. Let me zoom in so you can see it. Okay, it's doing technical analysis with projections, base case, best case, worst case, projections 7 days into the future. It analyzes inflation, GDP, employment, and interest rates, and then compares the two together. Compares interest rates, does comparative analysis. Okay, it looks at retail positioning. It looks at institutional positioning. It looks at the 5-year and 20-year seasonal average, scores them all up, and it's very bearish. So, today, you knew this because it's been like that for a long time. So you knew today, as you knew probably here, you're a bear. So what do? You sell lower highs. Now, when you sell here, as I teach you for the $88, gee whiz, it's so cheap, guys. Come on. In the training course at Investor Bootcamp, you learn that predicts this and not a penny lower. Can anybody confirm that they know this? M3 to M1. Can anybody confirm that they know this? That they've trained it, they know it, it's factual. If someone else doesn't know it, they're doomed. Okay? Thank you for answering. Now let me ask you another question. How many people knew, actually let's do it this way. When did you know that I wanted to buy the US dollar the first week of January? When did you know? Just not that you knew it. When did you know I was looking to buy the US dollar at the very beginning of January? When did you know? A day, a week, a month, a quarter, 6 months? When did you know? When did I tell you? When did you write it down? Look at you guys. Yeah, okay. So for those that are new to this, if you don't have that level of insight and you just show up every day and you wing it, you're not gonna survive. Do you understand? Like, you don't have a chance. Right, Angel? Yeah, Angel knows. He has great questions. So anyways, like, you wouldn't have a chance if you're just winging it. There's just no way. If weeks and months in advance I'm preparing people for this, and then the training course says, well, if that's your top, this is your bottom. Like, dude, there's no way you're going to survive. And then with Quant Box, it's like, even though this is trending up for a while, Quant Box is bearish, 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 bearish. And then you go back to your training and, this is a sell pivot. This is a sell pivot. So that's your sell zone. Couldn't get any easier. And depending on which one is your top, you get your bottom. So I don't know the future. That would be arrogant. But I know my behavior. And my behavior is based on my analysis. This entry, if it holds. So now we need a lower low, lower high, lower low, lower high, lower low, lower high. The actual expected target is down here. Now, if the market kind of dries up and gets scared and all this, this is the conservative target. We'll call it 159 or 59.75. And the the aggressive target and likely target is 159. Sorry, 159, 0.59. And I don't know, that's not a prediction. You have to understand that's not a prediction. I'm reading the chart. If that's the top, then that's the target. That's all the chart says. Okay? I'm not Mozart. I wasn't writing and composing symphonies when I was 5. I'm more of a concert pianist. I've taken lessons for 20 years, and I can read sheet music, and I can play Mozart because it's just written on the paper. I can read the notes and tickle the keys just right, and it sounds like Mozart. So I'm not making any genius projections. It's just what it says. Of course, I understand the seasonality. I understand the difference in monetary policy. There's a lot of other things going on. But like, if you can't do that, and you're just showing up every day going, "What's up, fellas? What are we doing today?" You are going to lose money. Because those that have this level of knowledge are just going to run you over. It's not even going to be funny. It's actually how you pay the bills. They actually don't mind if you get in the way and do stupid things. Sure, by all means. But the cool thing is now it's a $7 trillion a day market, and there's plenty of money to go around. So there's no need to have a kill or be killed attitude. To me, it's more of a dance now. I don't know the future. I don't know if I'm right. I just know what I intend to do. And often I'm wrong. Yeah. But I don't go at it willy-nilly either. Okay, and then Latte Cafe says, "Hey man, looks like a inverted Elliott wave 1 to 5 downward." Great. I'm not an Elliott wave guy, but that's cool. Right on. I'm not a rules-based guy like that. No. I don't count waves. There's no way. There's no way I'm a wave counter. Yeah. We can look at my Aussie dollar. It's recovered again. Okay, cool. Short at 67, and we're on our way down to 65. So I'm back to about 200 pips. And I've already planned out the entire month. And based on what I just said, the target is this target. So I get out just above. Remember, I got to cover my spread. So I'm getting out just above. And I have to adjust my time. So maybe I'll go out to daily. And really, it seems like we'll probably do something like this, because the timing is an issue. I can also look at this and see, like, if we hit the target, it's just not going to be that quickly. So maybe it ends up being something like that. Now, going back to January, as we were talking about before, I planned this out in December, and I drew this arrow, and I drew it so long ago, like the time frame is so different, it just struggles to even draw the arrow. So that's an arrow. But what I planned was first week in January, it's a sell, and down here is the target, and we just hit that now. Sweet. And so by the end of February, we'll probably be down 63.5. Cool. So you're showing up today going, what's going on? Oh, I'm already making money. What's going on? Nothing's right, I'm done. Yeah, probably, Mikal. Probably. Probably. Now, I don't know. And the issues going on now is probably no longer the Fed. Okay, we just cleaned all that up. And we can use the Fed Watch tool to do that and see the change. In fact, I'll do that in a second. But the probability of that is now impacted by the election. But even then, I think the election is going to impact the markets later, like September, not necessarily today. So if I go back to seasonality, yeah, there's a possibility, or a high probability that it comes down now. Yeah, very possible. The Fed's not going to cut. They're not going to cut in March. They're not going to cut in May. And those cuts were priced in. Now they have to be priced out. There was a rational exuberance based on people's guesses and conjecture, which makes them dumb money, in my opinion. I don't do such terrible things. So good for them. So why don't we take a look? Let's get some facts. And then I think I'm going to need to reload on the coffee. Oh, stock market's so bad. Oh my God, stock market's so bad. But let's do this quickly while we eyeball the tech. Based on today's new information, let's go to the May meeting. Okay. And it says 1 month ago, where are we? Okay. 1 month ago, nobody, well, that's not true. 1.6% of the market thought the Fed would still be on pause. Let me say that again. 1 month ago, less than 2% of the market thought the Fed would still be at 5.25, 5.5. So more than 98% of the smart money priced in a cut in May. I've never once thought that. So again, for the sake of talking to your own subconscious, do you guys agree that I've never thought a May cut was even possible? At the same time, 98% of smart money said it was absolutely certain. And I'm like, no, it ain't going to happen. That doesn't make any sense. Why? I actually do the work. I don't have an opinion. I just look at the data. The data has never suggested a January cut. The data has never suggested a March cut. The data has never suggested a May cut. Thank you, Jim. I guess Jim knows. All right, cool. All right, so let's go back a week ago. 12% said we would still be there in May. Okay? It's now it went from 6 2 days ago to 30% now. Dude! It went from 2% thought we'd be at paused to now 30%. Oh my God, that's bigger than a magnitude. Holy crap. Yesterday, let's just focus on this. Yesterday, it was 6. Because of non-farm payrolls, it's now 30. Does that mean dollar strength? Yeah, probably. Yes. That's massive because of today's news. People are like, oh, snap, we're wrong. Well, once again, my opinion was they've been wrong all along. So I did a Q1 outlook back in early January, and I spent 2 hours trying to find the data that would suggest rate cuts are imminent. I spent 2 hours going through all kinds of reports that I pulled from the Fed, I couldn't find any data. Couldn't find any data that suggested the institutional investors were correct. Just a week ago, 90% chance of a cut. I'm like, there's no cut. There's no cut. The market said 90% chance. I'm like, no, they're wrong. Now, is that ego or egotism? I believe it's ego because I've done the work, and 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 I've done the work. So I know why I think it. It's not a guess. And this proves, well, I'm significantly more likely to be correct than before. Now I'm only betting against 70% of the market. Oh, sweet. I got some people on my team now. People are trading with me now. I'm like, climb aboard the pip bus. Boop, boop. Climb aboard. Okay? Yeah. Now, June, I think, is the live meeting. And once again, nobody thinks we'll still be at, 97% chance by June, not on June, but by June, will be lower than 5.25, 5.5. And that the 33% chance that there's the first cut. And of course, the people that think they're going to cut in May, and everyone else thinks they're also going to cut at the June meeting, well then, right? So now 33% of one cut, 53% chance of the second cut. You see? That's how you read all that? No, I don't. A-I-E-L-E. No, I don't. No, what I said is it's irrelevant to the Fed. That's what I said before the meeting. I said this meeting's irrelevant. The only thing it's done is educated the market participants that they were wrong on their stupid guesses about what the Fed was going to do. But it hasn't changed what the Fed was going to do. You have to understand there's the market, which is investors guessing about the future. And then there's economics. And I do macroeconomic analysis of the facts. And I listen to the central bankers and take note. I read the reports that the staffers use to make these determinations. And now with Quant Box, I automate the whole process. So I have the same data that the Fed does. Plus, I'm paying attention to all the central banks around the world, and I have their data. So by and large, I know what I'm doing. And so again, that's ego, but not egotism. I just have better information. I think the secret is have better information and do better work. And on the long run, you'll be just fine. But you have to stop acting like an amateur. You know what I'm talking about? Okay, Osama says the Fed say they want a strong labor market. No, that's not accurate. Sorry. The Fed has said, and I'm talking about in particular, I read the report from the Economic Committee at the Board of Governors. And they expect that that unemployment will not have any, major or significant. Employment will not have any significant change this year. In fact, I think they went as far as 2 years. That we will do this week after week after week, week after week after week, week after week after week, and there's going to be no significant change to employment. This is what the Fed staff reported to the FOMC at a meeting. I read it. I saw it with my own eyes. I know exactly what was presented. They don't expect NFP to fall significantly. They don't. It's not in their projections at all. Now, here's the thing. The key distinction. Most people, and I mean like 90%, do not actually read the report. Yeah, and you can too. It's public information. People don't do the work. People don't do the work. People don't do the work. People do not do the work, and it's not difficult. It's amazing. 2 hours a week, and I go through it in great detail. I could burn through these reports in less than 45 minutes myself, but I take the time and I go through everything, and it takes me 2 hours to explain it to the group, which is fine, and we have fun doing it. But it's written in plain English, and people refuse to download the report and read it. And then they wonder why they're broke. Well, they probably deserve to be. Ooh, that's harsh. Jesus. Come on, Wayne. Yeah, well, you know what? I'd rather be brutally honest. Okay? I'd rather be brutally honest than get you excited and give you dreams of grandeur that you can just pop a couple of $100 into the account, maybe buy an EA that does the trading for you, or maybe you do a copy trade. Yeah, maybe you do a copy trade and you copy someone else's strategy, and that's going to make you rich. No, and no, and no, and no. Okay, you need to focus on doing the work and asking for more. Please, sir, could I have some more macroeconomics? Yes, you want to find more reasons to do more work. My wife looked me straight in the eyes last night and told me I work too much. All right, guilty as charged. Fed reports and plus speeches. Well, like, again, I post it all for free. I can do it because I know nobody's going to follow up. Okay? InvestorBootcamp.com blog. There's no paywall. Now, I don't post the video publicly because that's for paid members. Okay? But here's all the stuff. Like, here's what we did. I had a glitch this week, so I had to pop in the data manually. But like typically, I give you like this one. So January 23rd, macroeconomic week on the street. It's nice. It's nice. Okay? So like, for example, here's an easy one. UMICH. You probably don't even know what that is. Well, I explain it to you. And then, of course, do I read all this? No, I skip it because I only care about this. Okay? Well, you might not know that. Well, I know that. But I also took the time because even if you read it, I went through that fast because, dude, you should do your own work. So we went through UMICH 2 weeks ago, University of Michigan Consumer Sentiment. There's only a subcomponent of UMICH that I care about. So I highlighted it just for you. So I just needed that paragraph. But the thing is, I do have a degree in this. So I know what it means. So I take the time to explain it and its impact on, let's say, consumer behavior. And I can share the theory, the economic theory behind the report. And what you'll find is, like, when I read meeting minutes, it's the banter between economists discussing issues. And there'll be sentences and word choices. And I'm like, this actually means something. Let me explain what this word means. It's an economic theory that everybody in the conversation already knows. But since you might not know, let me explain it. There's a history behind the word. And what it means is this. And what the intention of the word is that. Therefore, the sort of the rebuttal is over here, and this is what they're looking at to get to that point of view. All right, that kind of stuff. But you could just get the UMich number. Yeah, great. But there's another level and another level. But here's the thing. So there's onions, levels to the onion, right? Layers to the onion. I think the biggest challenge for retail Forex traders is they're not even willing to download any report. They're not even willing to look at it. They're not willing to click the button. They're not willing to look at things and try to what does this mean? And then Google it and do research for 4 hours. They're not willing to even click it. Dead in the water. The first step, and at least for me when I first started trading, is just to look at the report, but I didn't have a degree back then in economics. I didn't know anything about trading. I didn't know anything. So I would write things down and research. And I was self-taught in technicals and self-taught in fundamentals. And then later on, just to prove I know it. Well, really, I went to Harvard to be a role model to my children. But it was also great to prove to people that I actually know economics. But I taught myself economics. Okay? Great. Here's a question. Do I post these on a regular basis? Let's see. January 30th, January 23rd, January 16th, January 9th. Was that every Tuesday this month? Okay, yeah. Seems to be, huh? Yeah. Yeah, I like my education. Obviously, I invested into my education. Are you willing to pay $88 a year for yours? And for many people, the answer is no. All right. Mark, that's pretty funny. Sometimes I don't know who you are anymore, Mark. My mother was right. Lovely. Oh my God. Here we go. Here we go, Bubba. Here we go, Bubba. Come on. Skitch and get your way down there. Scoochie boochie. Come on now. Let's update this. Yep. Very cool. So look, a 50% retracement. So I can update this. If that holds, then 50% predicts a 1382. So let me see if I update it. And it's already on a 1382, I think. Oh, that's a different time frame. That's a different trade plan. Oh yeah. So anyways, let's go back to this 1382. Ooh, which is a monthly pivot. That makes sense. All right. So let me go back into the 15. So let me change the slope because you can't see that. Boo. There we go. Done. Smoking hot like fire. When I trade, you desire. I'm fresher than you because you white. I ain't lying. I ain't dying. Up to number 1 is where I'm flying. Yeah. Huh? You like the old rap stuff? If I was president, I'd be living fat. If you vote for me, I'll paint the White House black. Oh, such good stuff. Oh, the 90s. Yeah. Cool. So anyways, yeah. What else? Cool. You know? Right on, Roderick. Appreciate that. Yeah. Yeah, J-Man. I saw it. I mean, I got stopped out at BE on it, so I'm staying away, man. I'll regroup next week. Number 1 rule, don't get run over by a freight train. Number 2 rule, don't forget rule number 1. It's slowing down as it gets closer to support. People think I'm insane. When we were up here at 24, 25, I said my projection was 8. 8. Now we've made it to 17, and even my little fibs are projecting 12. A 50% increase in the value of the Mexican peso from the top. 50% is my projection. And so we're just on the second leg here, the second wave, not an Elliott wave, but second process. And so, we have it down and then up and then down. And now we're on this one. So I guess it's the third one. Okay. And we're working our way down. Now you have to have a pretty big point of view, long-term view. That's not technical. The entries and exits are technical, but the trade is very much fundamental. And this has a lot to do with China. Thank you very much. Oh yeah, we forgot to do the Chinese stock market. So I was long this earlier, and let's just start with the logic. And I'm no longer in it. I got knocked out at break even, but I was in it for 3 days or something. All right, double bottom. Hua, hua. So if I wanted to be a bull, I have permission to engage. Okay. Then the rumor came out that there was going to be Chinese stimulus. So there was an up and a down. I bought it. Then it went up to the next level. And at the time, we knew it was resistance. We had it like this. But the idea was maybe based on the new Chinese stimulus, you'd get an up, a higher high, and a higher low, and a high, and you start climbing. Stairway to heaven. And, well, that didn't happen. And that was the probability. And it was all discussed in advance. But probabilities might have changed a bit based on if China actually deploys $1 trillion. Okay, great. But the desired effects have not happened, and it's now on a lower low, and I would walk away, or I am walking away. So I had the shot. I was profitable for a couple of days, 3-4 days, and now I'm not in it. So I had the opportunity. Next opportunity is there, and the third opportunity is somewhere in there, right? So anyways, so maybe, but not now. This is bearish, this is bearish, this is bearish, and it will stay bearish forever. I just happen to have a rumor and a double bottom. I was able to enter logically based on this pullback, and I was able to manage my stop appropriately by moving it to break even. I had an opportunity. It didn't come to fruition. I was not harmed, but I had upside. Okay? All right. You know what? I think I'm done. It's 10. I think I'm done. I've had a long week. Long week. It was good, though. It was a good week. Long, but good. Look, I don't show up here to bitch at you. I apologize. But I do care. I honestly do care. I really do want you to succeed. Right? Think of Trader's Way as a broker that also wants you to succeed. Most brokers don't want you to succeed, honestly. I've talked to people who know people, really good people, as Trump would say, and they've talked to brokers and they're like, we don't want this because it would make our customers successful. I know people who know people have been told that by regular big old brokers you've known. They're like, we don't want this product. We don't want this service. We don't want this education because it might make our customers profitable. And that would be bad for us. Wow! So I want you to succeed. Well, because it doesn't hurt me. And we're a great community. It's inspiring. I'm inspired all the time. It keeps me excited. Trader's Way wants you to succeed because they're an ECN. They would love it if you were a successful trader. Traded for years. It'd be great. So if you want good service providers, we're here. Check out FX Bootcamp. Check out Investor Bootcamp. Check out quantbox.co. Check out traders.co. Traders.co. Radars for traders. If you put yourself on the email list, I'll let you know. Maybe you become one of the first. Well, my plan is to do a soft secret whisper launch. On Monday, okay, let me talk about this. Thank you, Jean-Guy. On Monday, the Council of Investment Advisors is meeting to review the performance of our pension that we manage. We started in December with a $50,000 account I funded at a major Wall Street firm. There's now $65,000 in the account. And we are going to review the performance of the portfolio and consider rebalancing and rotation. And there is rotation that I want to do. So I'm waiting for the meeting on Monday. So the council manages my corporate pension fund. So if you want, and I'm looking to add members to the council. 3 people have contacted me to join, and I hope they get off their butts and join. But if you want to become a money manager, I don't care if you don't know anything. I want you to know nothing. I'm going to teach you everything. Okay? But I need you to be serious, and I need you to commit long term. I want you to be on the council for years. But here's what you're going to get. I'm going to teach you about money in ways you've never heard money talked about before. You're going to learn about very complex strategies used to manage money. You're going to learn how to construct and manage a portfolio. You're going to learn how to earn income, not just asset appreciation. And you will, because now you're on a council managing money, well, this is a way for you to have a track record of success. You could say, I grew an account from $50,000 to $1 million. It only took me 8 years. Okay? You understand? Like, if you want to be a part of a team, I just need you to be serious as a heart attack. I don't need you to be a genius. I need you to learn what I teach you and then make sure we make good decisions. I don't need a money manager. Okay? If you want to learn how to be a money manager, I will teach you, and I'm using real money at a real firm as a way for you to learn. Okay? You understand? So our meeting is on Monday. Well, there's a 16-hour course I'd like you to watch at least before March 20th. Then you got to watch the last meeting where we made all the investments. Well, that's another 8 hours. So we have a meeting on Monday, but by the next major meeting, which is March 20th, I need you to go through at least 16 hours worth of training. Plus the early March performance meeting that we do, performance review. So you need to join today. And if you want to join, but you have some problem, a few people have emailed me. They're like, I want to do it, but, well, email me. Tell me what's holding you up. Okay, investorbootcamp.com, CIA. Check it out. It'll give you a basic overview. It's not a good site. It's an ugly thing. It doesn't tell you everything we do. It's just very basic. It shows you the price. And then you email me. And tell me your special, unique situation that is preventing you from achieving your destiny. And we'll get you fixed. If you're serious as a heart attack, I won't leave you behind. But if you're a poser, I'm not interested. Okay? Cool. So I got to go. That was my last uplifting speech. If you're a poser, I'm not interested in helping you. How funny. Well, look, cool. So if you want to manage real money, I'll see you on Monday. Click the link, join. Let's go. I got 65 grand on the line. Let's go. Let's turn it into $1 million. Let's go. What are you waiting for? Let's go. Let's go. Let's do it. Peace on earth. May the pips be with you. May your profits be above average. Click the thumbs up button out of respect for FXStreet. Thank you, moderator, for moderating better than every moderator has ever moderated before. There's nothing moderate about our moderator. She's an extreme moderator. Have a wonderful weekend, everybody. And if you're in my day trading group, I will see you Sunday at 7 p.m. Eastern Time to plan the day before the day even starts.